Okay, I was saying some good stuff and you guys couldn't hear me. I was muted. So, anyway, happy Friday. Happy Friday, everybody. It's your favorite funding partner, Ronette Turner Corley, and I'm coming to you live today to just share some education when it comes to being a business owner, seeking business funding, and knowing which products are out there. Some that can serve you, and some that are not that great. So it's um, it's just education. I'm gonna come on, every Friday to just share some tips and some experiences, as well as like I said, education, so that you can just fill up your bucket, so you can get more knowledge and knowing how to navigate out there when you're looking for funding, because it can be overwhelming, it can be brutal, if you really don't have the information, or someone who really has your best interest at heart, which I do. So, for those of you who do not know me, my name is Ronette Turner Corley. I know I'm actually live on a couple of platforms here. I believe YouTube, LinkedIn, as well as Facebook. And I have been in the financial services industry for over 20 plus years. And recently, not too long ago, entered into doing business loans and business financing for business owners. It's been it's been fun. It's been amazing. It's been an experience to be able to see really today what the business owner deals with. And so, based on that, I want to be able to educate, so that, because what I've seen is a lot of I've seen the good, the bad, and the ugly. And because of that, I'm just, volunteering my time, just being an advocate in this space, to be able to serve and help people to the best of my ability. So today, I don't know if you've seen my topic, but today, if you are a business owner, shout out to you, because today, in today's market, it's not necessarily that easy being a business owner. There's a lot of moving parts going on. The economy is high. Everything's priced differently today. And because of that, business owners are feeling the crunch. So congratulations, especially if you're thriving. Congratulations for those of you hanging in there, and doing the best you can do, and still, one foot forward at a time. Congratulations to you too. So today we're going to talk about MCA loans. MCA stands for Merchant Cash Advance. And I wanted to talk about this topic because there's so many different, there's so much talk about MCA loans, if they're good, if they're bad. You have people on one side say, hey, don't do it. I would never do it. You're going to go out of business. And you have other people who are like, oh my God, it's the best thing that saved my business, right? So I'm going to talk about the good and the bad. And so you can see if it's a right fit for your business. I don't believe every loan is for everybody. Okay. I don't believe that every product is for everybody. That's why they have different options out there, right? And for me, an MCA loan is basically the last resort, meaning you need some cash, because at the end of the day, businesses need capital. And let's just face it, today banks are not lending to businesses like they used to. I think the studies show about 85% of business owners are getting turned down today by banks. Why? It's just what it is. So if you can't go the traditional route, alternative lending is a space that was created to help business owners out there. Okay. So that's where the MCAs fall into alternative lending. The rules and regulations are less stringent. You don't need as much documentation. The rates are typically higher, but you can still get the deal done. Okay, so that's what's good about it. Now, let's go ahead. I'm going to talk about different loan products, up and coming to come. But if you are a business owner and you're looking to get some business funding, today I'm going to educate you more so about MCAs, Merchant Cash Advance. Now, when it comes to Merchant Cash Advance, really, they're not loans. You're buying money. That's what you're doing. The private lenders out there are lending you money. It's a cash advance. You know how you go to for, they have those payday advances out there, and people who get in a tight crunch and they say, hey, I need some additional cash, right? And they go to these payday places. Now, when they go to the payday to get some extra cash, you already know it's because, number one, they really need it and they want to get an advance on money before, they get paid or money show up. That's pretty much what a kind of like, so you can kind of understand what a merchant cash advance is. You're basically borrowing money. It's not like a loan, okay? It's considered an advance on future sales you haven't made yet. So they basically lend you money on sales that's to come. It's no different, once again, from the personal side. They're lending you money on a paycheck to come, right? Same exact thing. So that's why the interest, or the interest is high, for lack of a better word. It's a factor rate. That's how they factor what the money is gonna cost. And it typically is a lot higher. Why? Because number one, it's unsecured. Now, I don't frown on the fact that these loans are like credit card rates. Some people say, oh my God, it can be as high as 40%. You bet your bottom dollar it can. Think about it. These are people who can't get approved from the bank. Typically, credit is not great. Sometimes they've been in business less than 2 years. I mean, think about it. If you had millions of dollars, would you really lend someone that money and hope it's going to come back? Of course, it's very high. Why? Because they're more riskier. So, but we're going to talk about today the perfect person for an MCA and the person who should stay away from an MCA. Okay? Because once again, they're not for everybody. Okay? So let's talk about this. Pardon me. Let's talk about the pros and the cons of a merchant cash advance. Well, let's talk about the dirty part first, right? The ugly part. The disadvantages are it costs a lot. It really does cost a lot. Okay. And so I compare them to credit card rates because it can be as high as I've seen some pay, 50% more. I mean, 50%. I've seen that. I think that's the highest I've seen. That's pretty high, right? It can be less than that, typically around 20, 30, 40%. But think about it. If you paid a factor rate of 1.5%, right? Or 1.5, I should say, a factor rate of 1.5, that means that if you borrowed $100,000, you have to pay back $150,000. Now, many people will see that and say, oh my God, ouch. Oh, that's so high. And it is high. It is high. But here's what I want you to know. Here's for all of my people out there that contact me continuously, thinking that you can have a 500 credit score and get the best rate out there possible. Come on, ladies and gents, that's not going to mix. Please, business owners, stop doing that. If your credit score is really low, already know that you're already in a position where you're going to have to pay more for the money. That's just how it goes. But I'm going to show you how, if you work with me, we don't keep you there. I don't keep you in that position. I have credit partners that will allow you to get your credit up so that we can circle back and we can treat this very short term so that we can get you out of it. But sometimes people need the money right away, right? But they are higher costs. That's a disadvantage. They are higher. The other disadvantage is that it has impact on cash flow. If you are a business owner and you don't have revenue, or you don't have what they call consistent revenue, like you're have a restaurant, or you're a hairstylist, or you have an automotive place, or someone who's not getting paid daily, it may impact your cash flow. Okay. So once again, even though someone may approve before MCA, be quite careful. It might not be the product for you. Why? Because it's supposed to help you thrive and make more money, not put you in harm's way. And that's why these types of loans have gotten bad rap, because some lenders out there will still approve you knowing that it's going to have an impact on your cash flow. right? So we totally stay away from offering loans. The lenders that I work with will not offer a loan to someone where it's going to have impact on their cash flow. If it can save you or make you money, we should not be doing business. So beware of those lenders that will still give you a loan knowing that you can't afford to make a daily or weekly payment, right? Because you just don't have the type of business model that works with. How about lack of federal regulation? This is huge. Why? Because there's no regulations. So that means that you have a lot of people in this market that, can do what they call predatory lending. And they don't have your best interest at heart. They're more concerned about how much money they're going to make. And that's a big issue. Now, don't get me wrong. I'm not doing this because I plan to be a nonprofit. Yes, we all do it for profit. But at the same time, you have to have integrity in making sure that you're doing right by the person that you're doing business with. Okay, because at the end of the day, once again, the loan is supposed to help you be able to make money, either scale or, stay afloat and get you through a tough time. That's what it's designed to do. And it pays out very quickly. Now, beware of those, because there's a lot of people out there in the industry that, and I don't blame it for just this industry. I don't just look at this industry. Do you remember years ago, before the big boom happened, the big crash happened in 2008, and predatory lending were taking place? I mean, everyone under the sun, if you had a post, you can get a mortgage, right? You could. And they had these different types of, 100% financing mortgages, all these different types of mortgage products where you can get into a mortgage and no documentation was needed, and all different types of things that allowed you to get into a mortgage. And they knew that at some point you were going to default because the numbers had to make sense, and you had to make it make sense, and it didn't make sense, right? So there was a lot of predatory lending going on, and there was a lot of people making a lot of money. So I believe anytime that you have an industry where it's not regulated or heavily regulated, you can have some people, and it happens in all industries. People can come in, and guess what? You can have those, that small sector of people. I'm not saying it's everyone, because there's a lot of good people out there. But you do have people in this industry that will prey on people just to get them in one of these type of loans so that they can get paid commissions. So the lack of federal regulation is a disadvantage because it's not being regulated at all. Now, the other thing is not suited for long-term financing. These are short-term loans. It's a disadvantage if only someone's looking for long-term. If you're looking for long-term financing, an MCA is not for you. It's a short-term solution. That's all it is. Okay, it's a short-term solution. So let's talk about the advantages. The advantage is that they pay fast. That's a huge advantage. Why? Because you don't have to wait weeks upon weeks or even, months, 60 days to get a loan. If you need money, you can get it fast. That's an advantage for the right person. Some people need to make payroll today. Guess what? An MCA, a lot of times, if everything lines up, the paperwork's in place, you can get your loan funded in 24, 48 hours. That's pretty cool, right? There's no collateral required. These are unsecured loans with no collateral, and most times, no personal guarantee. These are all advantages. But once again, for the right person, I'm a fan of MCA loans. Now, this is not the only type of loans I do. I want to make that clear. I do equipment financing. I do invoice financing. I get people in lines of credit. Okay. I've been doing commercial loans and also MCAs. But MCAs are only for the right person because you want to make sure that it's the person who can handle the different nuances that comes with this loan, and it's very short term. It's a flexible process. Okay, what I mean by flexible process? Well, you only need bank statements and an application to get approval. bank statements, and an application. There's also no impact on your credit. Now, that could be a disadvantage if you're looking to build your credit, but it's an advantage if you want to really secretly get some money and it not affect your credit. Okay. So you can actually, I've actually done work with people who are applying for a home loan and say, listen, I can't really have my credit run right now. I'm applying for a home loan, but I need this money for my business. Guess what? It won't have any impact on their credit. They can still go about getting that mortgage, but yet still getting money for their business. They can be used for any business need. So with the MCAs, they won't specifically say it's for equipment. They won't specifically say it's for, working capital. It can be for whatever you want to use it for. It can be to hire someone. It could be to bring more footsteps in the door in the terms of marketing. So it can be used for whatever you want to use for. And there's no, specific terms that you're going to see in the terms that say you have to use it for this particular thing. So those are all advantages, right? Now let's talk about who this loan is for. Typically, I work with 3 types of people who this loan is for. Someone who's been turned down by the banks. Once again, 85% of people are being turned down for business loans at the banks. It's just what it is. Not to fault any bankers. I've established great relationships with bankers. They do a great job. It's just what it is. That's not their focus right now. The market is what it is. And people are being turned down. It's not even because of credit. I've seen people who've had a great, credit portfolio, right? As far as business revenue, great credit score, and still get turned down. Time in business, everything lines up to see like this person would, really be able to get a loan. No. So I don't know. There's no rhyme or reason. I have no idea why that's happening, but this is why the alternative lending space came into existence. Now, people who have been turned down by the banks. Okay. That's who I primarily work with. People who can't qualify for the banks. Typically with the bank, if you're in business and you are less than 2 years old, forget about it. You're not going to get a business loan. But guess what? We can talk to where now you could either get startup capital or you can get a business loan as long as you've been in business for 6 months or longer. This is not startup capital because obviously startup capital, you haven't been in business at all, right? So that's a whole nother type of loan. That would not be an MCA. But for those who are looking for working capital, you have to have been in business for at least 6 months and generating revenue. And then the third person is someone who needs fast cash now. I need cash now. It might not necessarily always be someone who's credit challenged, right? I also work with people who need money now, and it's only because of the fact that they might have a project that they have to fund now, and they don't want to wait 60 days to get monies or do even an SBA loan, which they can still do. But in the meantime, remember, there's no impact on your credit. So they can get an MCA while they're waiting for the SBA to come in. Those are people that I work with. Now, who is this MCA for? Someone who's generating consistent income. Okay. If you're generating consistent income and there's revenue there, an MCA could be a good fit for you. Ronette, the cost is so high. Absolutely, it is. Why? Because you are a risk to the lender. And the reason why you are a risk to the lender, because most of the time you're talking about people who have credit scores less than 600. So, there's a sweet spot there. You're going to still get the money. You're just going to pay a lot more for it. So typically, sometimes people will say, well, forget it. I don't want the money. If I have to, pay that much for the money, I don't want it. Let me share something with you, ladies and gents. That could be a smart move, but it cannot be such a smart move for, depending on your situation. Let me tell you why. Because if you're really in need of that money, studies show, I was talking to someone yesterday, and I believe it was Harvard Business School, did a study and talked about the reason why most businesses go out of business It's not because of all the things you can imagine. It's because of cash flow. So what happens for that business owner that says, well, forget it. I'm not going to pay the person who can afford an MCA, not a person who cannot afford. A person who cannot afford an MCA should never be in an MCA, regardless of the situation. But I'm talking about a person who can afford to have this MCA. Okay. Now, what happens is you have some people say, well, I'm going to use my own money. You're sucking your cash flow dry. See, the thing is, there's a lot of wealthy people who get MCAs because they understand the time value of money. They're willing to pay the higher cost. Let me explain. Let's say, for example, you borrowing $100,000, based on that $100,000 will yield you $500,000. Because there's some people who come to me and say, Ronette, this $100,000, the reason why I want to get it now and not wait, because based on this money, I'm going to be able to flip it to $500,000 of profit. Now, let's say that person's factor rate was 1.4. That means they're going to pay $40,000. So when they pay that $100,000 back, they're going to pay $140,000 back. Ouch, that's a lot, right? But take a look at the bigger picture. The reason why, and a lot of real estate investors really understand this, they don't worry about the rate because they understand the amount of profit that they're going to make far surpass the amount of the cost of the loan. Because at the end of the day, if that loan costs them $40,000 and they make $500,000 profit, and they deduct that $40,000 from that $500,000 profit, well, you're still looking at what? $460,000 profit. So when it balanced it out, it was a good deal for them to go ahead and take that loan. But once again, I like to stress, this is someone who can't afford it, okay? Because everyone can't afford an MCA. So make sure when you're talking to someone who is helping you, decide on based on your financials, make sure they know how to, share with you the right product that's going to help you thrive. MCAs can be a wonderful fit, but they can also be a detriment to the wrong person. Okay. Now, take a look at this. Did you know small businesses who get a loan increase their sales by 41%? This is a statistic that was done that shows that 41% increase for small businesses who get a loan as opposed to someone who doesn't. So that goes back to saying that having a loan that can suit your business and one that you can afford can put you in a position, or should put you in a position, to have business growth, okay, where your business can grow. But let me share with you how we do it here at Secure Path Funding. So let's say that you wanted some working capital, needed some working capital. First thing we're going to do is make sure we run a soft pool to make sure which product that you should, entertain. Okay, because based on that, based on your credit, it's going to determine which product you can qualify for. Now, here's the nice thing. I just partnered up with a lending partner who can now do business lines of credit in place of an MCA, and your credit score can be as low as a 600. I hope you heard that right. Your credit score can be as low as 600. And the nice thing about it, the rate will be nowhere near what an MCA is, right? And you can use the money as you see fit. So the money sits there just like your regular line of credit, right? And you can access it when you need it. So if you don't need it, it just sits there. Isn't that beautiful? Yes. So there's new products that are coming out to help people whose credit is still not up to par to get A paper rates. However, for someone who doesn't qualify for that and can afford an MCA, we take a look at that and say, okay, well, let's go ahead and talk about the MCA. Now, this is a nice thing about the merchant cash advance when you are connected to the right people. The lenders that I work with, what happens is that they just want to establish a payment history with you, because this is what happens. You're often given a higher rate because they're taking a risk and they have no idea if you're going to skip town. Because remember, these funds are unsecured. You can skip town and they'll never see that money again, right? They want to get an established rate. I mean, not established payment history. So this is what we sit down and do and talk about. Okay, this is your rate. Factor rate 1.3, 1.4, 1.43. Whatever the case may be, you're going to have daily payments. You're going to have weekly payments. Some allow you to have monthly payments. So whatever the case may be, let's say it's a daily rate, which is most common. Daily payment. So here's your daily payment. This is what's going to be, but this is what we're going to do. Let's go ahead and number one, let's make sure that we get you the capital that you need right now, because obviously you need capital right now. Once again, this is for someone who has a business model that an MCA can support an MCA. Okay. Now, when we do that, the other advantage I didn't mention was that also the interest on the loan is tax deductible. Okay, I'm not a tax professional, but you can talk to your tax accountant about that. So the cost of the loan is tax deductible, so you're able to get, have that advantage as well. But going back to what I was saying, and we sit down and we take a look and we go over that. And if you're someone who qualifies, because here's the thing, you'll get some people say, well, they're too high, stay away from those type of loans, but they don't have any answer for you. I don't understand those out there. Now, I do understand when they say, well, stay away from an MCA if your business model can't support it, because you shouldn't be in that loan anyway. But if you're someone based on your business model, your revenue, and needing capital now, and you just can't qualify for, any other alternative lending product, an MCA could be the difference maker for you staying in business. I can't tell you the amount of people who said thank you because it was able to hold me over, right? The right people will come back and say thank you. This made a difference, right? And that's when you know you're doing a good job. So once again, I digressed a little bit. So when you're going over that and you say, okay, let's go ahead and do the MCA. Here's what we do. We'll go ahead and let you know that up front. Let's start making these payments, make your payment on time, and then let's circle back 60 to 90 days. And that lender will take a look at that and now be able to even give you more money if the fund, if the revenue is there to give you even more money, as well as extend your terms out to a more affordable and a better rate. Why? Because now you've established a payment history. So you can't be in a situation, I want you to really understand this. You can't be in a situation where no one's going to lend you money. You have, low credit score, and you expect to get money at a cheap price. That doesn't make sense. But here's what I want you to know. Get with someone. You can also come to me because this is what I do. I'm not going to keep you there. I have a credit partner that is amazing. It's a credit company that will do what they call credit sweep, and your credit will go up faster than you know, right? So we're looking at, typically credit takes some time to move. I'm not saying it's going to happen overnight, but we can circle back about 6 months from now. And now you're in a better position credit-wise. Your credit score has gone up. Things have gotten removed. And now, your credit score is a much healthier place. So what we do at that time, Let's reassess the situation. Let's get you out of that loan and get you in a loan that's going to be a lower rate. And then we'll go ahead and pay that MCA off. So you still was able to accomplish everything, and you didn't have to pay it through its entirety. And most of the MCA loans that and lenders that I work with, they have what they call it's a payoff, early payoff. It's an advantage where if you pay it off early, you get a break because you're paying it off early. Okay, so that's the perfect situation for someone who needs capital now and can afford it. But the nice thing is to not keep you there. See, what you do not want to become is an MCA junkie. I've seen that over and over again, where people will get 1 MCA, 2 MCA, 3 MCA, 4 MCAs. And it's because they continue to need the money. But what happens is no one is helping them be able to get out of the hot seat. It's okay to be, everyone was, when you start off, everyone's not going to be in the same position. Sometimes people haven't been taught how to, or things happen, and you haven't had the knowledge on how to, keep your credit score and your credit profile healthy. But when you know better, you do better. So now that we're here, let's help you get the capital, but let's not keep you there. So what we do, we work with helping you get that credit score up. So down the line, 6, 7, 8 months, we can look at it now. Maybe it's gone up 30 points. So now we're in a position where we can get you that line of credit. We can get you another type of loan. Why? Because now you can qualify for that. Okay. So just know that MCAs can be good for the right people, but they can also be bad for those who should not be in one. And when you see those who are complaining about them, having a hard time making payments and believe me, those are people either who should not have been in them or was not educated on how to use that money properly. Okay. Because it's very important also when the business owner gets that money, it's not time to go on vacation. Some business owners are in these positions not because also of maybe the lender. Sometimes it's because of their bad choices. So remember, when you get the business loan, even though it's not pegged for you to use it in a certain way, make sure, one of the things that I will do, I will ask, what are you using the money? What are you getting the money for? Okay. Because that's very important. And sometimes what happens in this space of this MCA world, you'll get people who don't care what you're using it for, because really it's not going to disqualify you if you don't know what you're using it for. But that can be at a disadvantage if you don't know. Why? Because then you start blowing it on things that can put you at risk of your business. So make sure when you are talking to someone about an MCA loan that they know your entire situation, they know your circumstance, they know exactly how to lead you in terms of helping you figure out what to do with the money, and you have more of a consultation than just someone who's going to do a transaction. That's a big difference. Okay. A consultation or someone you can consult with versus someone who's just transactional and who's just looking for the next commission. That's where this is going to make a difference. Okay. So I'm hoping you really understand how this works, because like I said, for the right people, I have a couple of them in hopper right now, and the people are really excited about them and they can afford them. Okay. So, and should be funding early part of next week. So just know MCAs can be a lifesaver for the right person. And it can be a nightmare for someone that should not have either gotten in it or was not educated on how to use the money and stay afloat and not get themselves in trouble. Okay. Because once again, it's working capital. It's not for taking your family on vacation and coming back and figuring out what to do. So that is it. That is my time. But I'm going to come back each and every Friday to just give some education, give some tidbits so that you out there can learn how to access capital, understand the different products out there that are available to you. If you are in need of business capital, give me a call. Go to the website, www.securepathfunding.com. Let us talk to you, get a chance to consult, be able to see where you are, what you're looking for, what you need for your business, and how to get your business thriving or even surviving. Some people need some money just so they can get through a rough patch and survive. Okay. And that's okay. It's all a part of being in business. So that is it for me. Inbox me if you have any questions, but once again, you can give me a call or go to the website. All right. So once again, this is Ronette Turner Corley. It's been fun to share this information with you. I'm your favorite funding partner, and I will see you back next week. All right. Bye for now.